In this video, we're going to talk about how to increase your credit score, so definitely stay to the end for that. But before we get into it, if you're new here, my name is Regan Mackey. I make 3 videos a week for you here, all about money, real estate, and investing. So if you haven't done so yet, definitely hit subscribe to see all my future content. So having a good credit score is really important when it comes to buying a house or a car or applying for a line of credit. Now, essentially what a credit score is, it's just a way to summarize your borrowing history and help lenders decide if they want to lend to you or not. Now, all of this is essentially just to say it's gauging how risky you are to a lender and how likely you are to default on your loan. Your credit score is based off of a pretty complex algorithm. There's also 3 different credit bureaus that might check slightly different things, and you actually might have different credit scores, but they'll all be likely the same because they're all checking the same thing, essentially just trying to figure out if you're going to pay your bills on time. Now, this is a pretty good rule of thumb for you to gauge if you're in good standing. Now, number 1 is your payment history. You want to make sure you're paying all your bills on time. And number 2 is your current debts. That's basically just looking at how much you owe on your credit cards right now. You don't want to be maxed out, and you want to be in good standing with all the people that you owe money to. The next things they take into account when determining your credit score is 1, your length of credit, so how long you've actually been borrowing money or how long you've had credit cards. Next, they look at new credit, so if you've been applying to multiple different credit cards in the recent past, they'll look into that. And then next, they look at the types of credit, so if you have a credit card or a line of credit or home or auto, they look at all those loans and then determine your credit score based off of all those factors. Now, the first thing you're going to want to do if you're going to go through this process of improving your credit is 1, sign up for Borrowell or Credit Karma. These are free services that will actually check your credit score for you and then email you once a month. If there's been any increases or decreases, you'll be able to see that. Now, this is what is called a soft hit. It's when you're just checking your credit score for yourself. It won't actually have any effect on your credit score. Now, there is what is called a hard hit. This is when you are applying for a credit card or applying for a mortgage or a car loan, things like that. This will actually show up on your credit report and will have a negative effect on your credit report. So it's important that if you are doing things like this, like looking for a car or a house, trying to get approved for loans for them, make sure you're doing that with different lenders within a small period of time, like 2 weeks, because all these hard hits will be looked at as one event and it'll be isolated and it won't look so bad on your credit report. Now, the reason why these hard hits will have an effect on your credit report is lenders will see that and they will see that it almost looks like you're urgently looking for credit or you're trying to live past your means, which is obviously a red flag for them. So how to improve your credit score? As I said, number 1, most important thing is your payment history. You always want to make sure you are paying your credit card off on time, every time. You'd be surprised at how badly your credit score can take a hit if you miss even just one payment, and that missed one payment will actually stay on your credit report for multiple years. So make sure you are paying off the full amount of your credit card every time, and if you can't pay off the full amount, make sure you are at least making the minimum payment. And even if you can't make the minimum payment, make sure you are contacting your lender ahead of time. Let them know that this is going to be a one-off. You're not going to be able to pay your full payment right away. You're going to be a couple days late, and hopefully they'll be able to help you out there. The next thing you're going to want to do if you're trying to increase your credit score is to use your credit wisely. Don't use the entire amount that you're actually eligible to use. So if you have a $5,000 limit, don't use $5,000 every month. Try to keep it low at around 30 or 35% even. So one thing that will actually help with this is whenever you're eligible for a credit increase, definitely do that. So if your limit right now is $5,000 and you're eligible to increase it to $10,000, always do this. This doesn't mean necessarily use the $10,000 every month. You get to spend more money. That's not what it means at all. But the higher your credit card limit is, the lower your percentage of utilization will be, which will help out your credit score in the end. So next, you're going to want to increase the length of your credit history. This means having 1 credit account open for an extended period of time. So your original credit card, if you're thinking of getting rid of it because you're not going to use it as much, don't do so. Keep it around unless you have insane annual fees or something like that. But the longer that you have your credit card active, the better it will look for your credit score. So in summary, you're going to want to use your credit cards often. Make sure you have enough money in your bank account to pay them off just as often as you use them. So that's it for the video. If you got any new information out of it, I would greatly appreciate a like, and definitely hit subscribe to see all my future content.